last 3 episodes of this order flow series, we talked about auction market theory, using footprint charts and bookmap to find trade setups, and in this episode 4, I want to introduce you to one of the most important tools for any trader, and that is the depth of market. It provides key information that allows me to find quality setups and make the best trading decisions every day. The depth of market is the order book, and it shows us how buyers and sellers are interacting by price. If you haven't watched those first videos yet, I will add the link in the description down below. Also, I recommend that everyone go and follow my Instagram. I post really great trading tips and trading recaps, which can be a really great resource for you to learn from. Now, let's take a deeper look into the depth of market. All right, let's go over the depth of market, or the DOM. In this video, I'm going to tell you what the DOM is. We're going to talk about how to use it, why it's beneficial, the function of it as a order flow tool, and we're going to go over how you can use it to kind of figure out if there's going to be like a short-term move up or down without looking at a candlestick chart. So first, what is the depth of market? The depth of market, or the DOM, shows us the order book. It shows us the price ladder of participants, and it allows us to place buy and sell orders. And it shows us completed transactions and volume by price. So before we get into the lesson, I want to bring your attention to this picture, which is of a New York professional trading floor, and I want you to pay close attention to their screens. Some of these firms have million-dollar traders that are like professional traders, and what you notice is all these computers right here, these are DOMs. These are price ladders. These are depth of markets. What do you notice? Are there more candlestick charts, or are there more depth of markets? This guy's got a volume profile right here. This guy has got 2 screens of volume profiles. And what do you see? This guy has 3 different monitors with depths of markets. He has 3 monitors with volume profiles. And then he has like 1, 2, 3, 4. He has like 5 tiny little charts. So the charts are just reference points. And he's majorly focused in on the actual order book and the depth of market. This guy's got it in the front screen. This guy's got it right here. There's one over here. This guy has some charts right here, but you can see that the screen is not dominated by charts. Most of their screen real estate is given to the depth of market, the price ladder, and order flow tools. I want you to keep that in mind, that there are people on Wall Street or traders wherever that make tons of money, and they're not even looking at candlestick charts. Like there's guys that trade without looking at a candlestick chart. And most of you are probably thinking that's crazy, especially if most of your education comes from YouTube. You know, everything is about candlestick charts and moving averages. And there seems to be like not as much info going on behind order flow. So I want you to keep that in mind as we kind of go through this lesson. As you go through any order flow content on my channel or anywhere, that, price is ruled by buyers and sellers and volume. And the candlestick charts, all they do is show you a visual representation of what's going on. But the magic is happening on these price ladders and these depth of markets. That is the actual order book where buys and sells are being placed. If you're an ICT trader, smart money concepts, all those things, that's fine. Indicators, moving averages, RSI, whatever you're using, the market goes up and down because an order is placed, right? An order is placed to buy or sell, and whether there's more buyers or more sellers at a specific price, the market will move up in that direction. It's not because your ICT strategy thing, whatever they call it, whatever names the guy has for him, whatever ICT thing you're seeing on the chart, that's only working because there are traders at that price placing buys and sells. So keep that in mind. So this is a depth of market. This is mine from MotiveWave. You can kind of customize these, but every depth of market is going to kind of like have the same functions of what's going to be on here. So I'm going to start with the middle column first, which are these 4 right here, which is the bid, the at bid, the at ask, and the ask. So the bid is the limit orders. This is your level 2. This is your limit buys, or your passive buys. So if you are in no rush and you want to buy at 6,030, you can click this, place a buy, and then for one contract, and this 128 will turn into 129, and your order will be waiting there. On this pink side right here, you have the ask, which is your passive sells. So if you want to buy at 6,035, you would click right here, and the 230 would now say 231 with your 1 lot order. All right, and then you are now a passive seller and no rush. This at bid and at ask column is going to be your market orders, which are completed transactions. Now, if any of this is confusing, I would definitely tell you to watch the auction market video, which is the first video in this episode, which goes over how auction market theory works. If you're confused by any of that, I suggest watching that. It might give you some key context, but market orders are filled by limit orders. All right, so the middle is market orders and they're color coded. So a market sell has to hit the bid in order to be a completed transaction, and a market buy has to hit the ask to be a completed transaction. The at ask is market buys, and the at bid is market sells, and they're color coded. This column right here is your bid and your ask volume. So this middle column volume is going to be right here. These are completed transactions. All right, so these are, you can see the histogram and like the profile, if there's more market buys or market sells at that price, and it shows your total volume profile. So the volume right here is going to be the total of these combined. So 375 plus 0 is 375. 303 plus 69 is 372. Right? 780 plus 543 is 1323. That's the volume. And then the delta volume is going to be your ask minus your bid. So ask minus bid. So 375 minus 0, 375. 303 minus 69 is 234. And then you come right here, like 1550 minus 1834 is going to be negative 284. All right, and that's how those columns are populated. That's the math of it. And then you can see a histogram or a volume profile to see where the volume by price is thicker or lighter. So just to recap, I have these color coded to correspond with the chart. A market buy is an aggressive order hitting the ask, which would be this 99. And a market sell is an aggressive order hitting the bid, which would be this 62. A limit buy is a passive order waiting on the bid, which is this blue column. And then the red column is a limit sell passive order waiting on the ask. All right, there's always a buyer and a seller for every transaction. If this column in the middle is empty and there is no one placing market orders, the market will not move up or down. These limits, these bids and asks do not fill each other. There has to be someone willing to hit the market to ask. Think of it like a housing market. If you are willing to pay $390,000 for a house and you place a buy for $390,000, and there's one house in that neighborhood, the guy that owns the house only wants to sell it at $400,000, what's going to happen? Nothing, right? The house will not be sold. But if someone else comes in and says, hey, I will pay $400,000 for your house right now, then you would have a completed transaction and then the market would move up, right? Or someone comes, another house, you have your buy at $390,000, and then a guy now in the neighborhood goes, hey, I'll sell my house for $390,000 right now. And then you would have him market sell to you, and then you would buy your house for $390,000. That's the basics functions of, how a market works, and it's the same thing in the stock market. So in order for price to move up right here and go up to 33 and a quarter, there's 71 right now waiting on the ask. So you would need 71 orders to come in, and this would actually say 72 because there's already one right here. You would need an additional 71, but just to keep it simple, if 71 traders market bought at the ask, then these orders would be filled. You would see 71 increase on this side. You would see this 135, it would now say 206, right? 135 plus 71, and then the volume would grow by 71, right? Which would say what, like 2,498, and the market would move up. In order to move down, you would need, 75 traders to market sell at this 6,032.50, and then the market would move down to facilitate that trade. All right, that's kind of the basics of it. We're going to watch a live video of the DOM moving, and I'm going to break it down further for you. We still want to understand how the depth of market is working and how these middle trades, and remember this middle column right here is market orders. So you have a heavier sell side book right here. You have more sellers willing to offer at these prices than there are buyers willing to buy down here. And then in this column, now this is the key thing right here is, there's a lot of sellers here. The buyers are trying to buy, but, let's say price moved down to 6 and, 100 lots hits the bid, but then 50 comes in on the ask. So there's not a lot of buying pressure, right? In order for price to move up, in order to be watching this and think that buyers are going to continue to move this up, you would want to see like 950 hit and then kind of like close out these sellers and then move price up. But because there's only 50 right here, the buyers aren't that strong. And all the sellers have to do is come down and hit another 400 contracts under this. And then that would clear out these buyers, and then price would now move down. And if they hit 350 here, price would also move down. You see that happen right here, right? These are the same charts. I want you to understand the math. You already have 100 and you have 400. So 400 more comes in. That's why this says 500. All right, you already have the 100 here. So you have 400 come in, 400 plus 100 gets you that 500. And then this one was just 350. And then now you have 350 here. So the buyers only hit 50 contracts, and then the sellers pressed with 500 and 350. They cleared out the book on the bid right here, and then price moved down, and then the sellers are still offering. So you really would need to see, like, let's say you saw 100 right here, and then you saw 800 come in right here, and then you saw like 700 show up here, and like price starts to move up, and you're seeing lower numbers on the at bid, and you're seeing higher numbers in this market column right here, then that's the clue that the buyers are now pressing in higher, and they're willing to buy down here at these lower prices, and the sellers are not willing to sell down here at lower prices, right? If you're a seller, you would rather sell up here at 8 than down here at 4, right? And if you're a buyer, you would rather, right? Would you rather buy at 5, or maybe you want to buy down here at 3? So buyers always want like lower prices and sellers want higher prices. So you get to a point where eventually the buyers are going to step in, and you can see that when you see size starting to be pressed, that clears out all the levels right here. And then you see like less size on the right, or less size on the left. Here's a heavier buy side chart, right? You have 1200 at 5, 1000 at 4. There's less sellers willing to sell up here. Now, even though the sellers are pressing hard, the buyers are hitting a little harder. So there's 400 cons right here, but they come in with 700. So, then maybe price moves up, and then you would want to see this 600 grow by another 700 contracts. If you saw 700 come in again, then that's clearing out this price, and then that's how price would move up. So these middle columns are very important to judge whether price is going to move down or is going to move up, and based on how these market orders are filling at the bid or at the ask. Just having large numbers on this column, it's like, yes, it's heavier buy side, but this doesn't show intention, right? I can place an order for 9,850 contracts at $3. If price comes down to 3 and then I cancel the order and I lift my bid, it doesn't mean anything, right? But if you see 9,000 right here in this column, like let's say this is 9,000 waiting. If there's 900, I'm just gonna say 900 to keep it simple. If you see 900 right here, this 850 doesn't mean anything until you see 900. Then you know that is a completed transaction, and 900 sellers market sold and hit the bid and filled at $3. All right, completed transactions matter. This doesn't matter so much. It helps us kind of look and to see that there's more sellers and there's heavier sell side and there's heavier buy side right here. But what matters is completed transactions, because that's where you can see intention. Now, let me kind of go through this video right here, and we're going to see a DOM work, and I'm going to kind of pause it and play it just to kind of show you what's happening. So again, we have the market orders in the middle, we have the book on the left, and we have the sellers on the right. So we can see how price is moving down. We're going to kind of look at this and judge, like, are we going to kind of move up? Or are we going to kind of move down? I'm going to pause it and play it frame by frame. So we saw this 135 go to 142. Now remember, if we want this to go down, this 8 needs to get bigger or to go up like the 29 or the 43. Like we want to see more size on the right. So if I pause and play it, that 8 went to 13. That now went to 20. There's 11 right here. 25. Now 25, and then now this goes to 20. It's at 27. So in order to move down, 47's got to get bigger. More traders got to sell at either 79.50 or at 79.75. More traders have to buy. I'm trying to do it frame by frame. So you see one order come in and it moves up. So only one seller sold at 79.25. I'm going to backtrack that so we can see. So there's 47. Now one hits. See if you caught that. So one hits. This says 48. And then it goes to 59. And then this 142 didn't change. All right. So we bid up because more traders hit the ask right there. This column refreshes like every 200 milliseconds. So that's growing to 39. And then sells come in. It moves down a few ticks. I'm going to keep going. This is going to make sense. So now there's 111 market buys. We're moving up. I'm going to kind of play this. All right. So now we're coming into the low. All right, one contract hits at 79. So boom, right there, 27, 23, 35, 116, 11. All right. More sellers hit the bid, price moved down, and there was weak buying. Now what happens next? Now buyers step in right after, and they push this up to 43. 16, 28, one comes in, 29, 46. You're seeing more size right here, 77. It grows to 78. Buyers step in right there. Right, this column grows. Now there's 61. Buyers step in again. Let me backtrack that again. So we're sitting here, 36.8. That 6 doesn't change. And we hit 33 contracts now at 79.75. 23, 34, 65, 72, 82. So what we're seeing right now is even though we get these moves down, the buyers step in right after and kind of bring it up. So we're not looking at a candlestick chart. We're just watching this column, and then boom, buyers step in again. Sellers try and bring it down. There's 78 here at the low, and then 269, right? What do you see right there? 269, 38.7, 38.731. We hit this low, and then buyers stepped in on the right. We saw bigger numbers grow. That's why price is not moving down. You don't just see 78 and think that there's big size and we're going to move lower, because you would need to see continued size hit and outweigh the buyers as we move down. If someone hits 78, market sells at 78.50, and then right after that, buyers hit 38.731, more buyers press higher, the market's going to move up. And that's what you're seeing happen right there. Grows to 90, 109, 116, 128, 141, and then boom, and then it moves up. And even let's like kind of go slow here and pause and play frame by frame. So we're looking at this 13 and this 18. That grows to 19. We move down. Buyers still buying at 79.50. It's growing to 133, 136, 141, 21 and 16, and then boom, 26.6. All right, that 18 didn't change. 26 orders came in on the buy side, and then 6 came in on the bid. And then 12 and 3, 7 and 5. All right, so the reason we're moving up is because there's more buyers, market aggressively buying at 59.80. I'm trying to find, there we go. This is a good point. So we're sitting here at this low. We're in this tight, like little 3-point range right here. So you're just watching the book, watching these orders. It moves down, 79 again, 101, 35, and then 68 comes in right after. The sellers are trying, and then boom, buyers press in and move it up. So right there, what we can deduce from that, we're not looking at a candlestick chart. You're seeing size come in on the bid, right? You're seeing large sellers, but right after we hit these low prices, buyers step in right after and push it up. So you can tell just off this price action that we're not breaking a low and there's size hitting by the sellers, but we keep moving up after and the buyers are willing to buy. So without looking at a candlestick chart, you can already start to create a bullish bias that this thing can move up. And if you're scalping a couple ticks, a couple points with size, that's how they, read this without looking at a candlestick chart. If you think, how can I just figure out if it's going to go up or down? You can see the size right there, and then the buyers step in right after, move this up. So it's not something that I want to really short because there's interest from buyers. And you can see the delta right here growing, right, to 600. At 79.75, there's heavy buying, right, way more than any other price point. So I hope this makes sense. If it doesn't, you can always just kind of rewind or like pause this video. But this is the depth of market moving in real time. And if you're zoned in, I zone in at key levels, at price levels, and watch the book to see if I want to get in a trade or get out of a trade, if I'm in a trade, right? If I'm short right now and I see this action, then I'm not going to be that comfy because even though we move down, the buyers press in right after and they move us up. So we're holding at 79. Look at the delta is growing. I'm going to like pause the video. We're at 251. I come back here to like a minute ago. It was at 575. Now at 200 and 251, it's at 638. So 79.75, there's a lot of buying volume, all right? There's buyers willing to buy there. We get above this grows, and then boom, we shoot up, 83. So right there. So before this push up, we're sitting at 79, and we saw this bigger sell volume come in. Let me just rewind right here. All right, we'll watch this. It goes to 112, it grows, 129, 137, 144, 157. We're moving up, right? If there's tons of selling, why aren't we moving down? And then this thing shoots up. All right, and at that point, right, we're at 251. At this point right here, when we're at 79 to 80, I'm telling you that there's like a bull bias in this, that the sellers are trying to push it down, and they're using size, and then the buyers come in right after, and they push it up. And then what happens next? You get this nice big move up into the 82s, 83s, and then it creates zero prints right here. This means that there was no volume traded on the bid. Now, when you see zero prints, this typically means they usually get filled pretty quick, and it's something I pay attention to, especially at highs when there's no volume. So now we're moving up, and then what do you see about the book? When I say the book, I mean the limit orders, the ask and the bid. We pushed up into 83 now. All right, there's a lot of buying pressure right here. But if you look at the level 2, it's kind of skewed heavier to the sells, right? We have 124, 63, 98, 52, 103. And if you look in this area right here, there's actually not as many buyers waiting to buy right here. And there's more sellers willing to sell up here. Maybe you're a scalper with a ton of size and you got in at 80 when we saw this area being defended. Maybe it's a trader at 80 and he wants to get out at 84, 85. I mean, you don't know the agenda, but we can just see the book. The book is kind of skewed short now. So now you see buyers coming in. I'm going to rewind this. Now you see buyers trying and pressing harder. All right, move up to 83. Look at this column right here. 68 and the 12 and the 4. It grows to 78. Goes to 104, 228. Very quick. Look at that. I'll rewind. In about 1 second, it goes from 78 to 104. We move down. 190. All right. So 80, 85. You can actually see it right there. See that 86? That 86 is a recent trade. So someone hit 86 lots, or 86 lots were traded at 83 right there to the buy. That's what that green is. And that's why it increased by 86. 110 now. Red. Now it's 228, 230. All right, now it moves down, 253. So now what do we see? Now you can kind of see this change in momentum, right? There's a lot of buying going on. We're pushing into this higher liquidity area. And you want to see buyers continue to press. Otherwise, the market will have to move down to facilitate trade. The market moves up to the last buyer buys. All right, the book is heavier on the ask side than the bid. You're seeing buyers come in and you're seeing sellers. And so you want to see that continued strength. And now there's strong buying. Now the sellers are coming in. All right. Now there's heavier side. There's heavier sellers right at the bid right here. 155, 106, 52. Sellers are aggressively selling right here. And this could be, I mean, if you're a trader at 80 that's scalping for 4 points, maybe you're trading 50 contracts. Maybe it's a floor trader and they just wanted to get 4 points. Now he's selling. You don't know. I'm just giving you a possibility. But we saw the book flip. We see a thicker ask, and now we're starting to see selling step in after this move up. And so you want to see buyers continue to press in order to move higher. And we have these zero prints down here, and like I said, those usually get filled pretty quick. And then what happens? I mean, it drops 3 points very fast. We can rewind that to see it again. We kid up here to 84.25. It grows to 30. We have 7. It goes to 48, and then it drops. So I'm going to rewind that one more time. I hope this isn't too confusing for you guys. I'm trying to like make it as obvious as I can. So when it gets to 48, I'll pause it. It's 30. All right, 48. I'll go to 46. I'll go to 47. Okay. All right, so it hit 48, and then 22 came in right after. So in order for price to move up and continue higher, you need to have buyers willing to buy at 84, 84.25, and if this column grows, price will move down. And you can see as it refreshed and the new volume comes in, there are more sells than buys on the left column, and price moves down. All right, 58 and 4, 45 and 35, 33 and 18. And we fill those zero prints, and now the market moved down. So just to kind of recap, all right, at the beginning of the video, we saw this strong selling, and every time for this first 2 minutes, every time we came down into the 79, 78s, the buyer stepped in and pushed it up. Then when we moved up into the 83s, 84s, we saw the book flip, and we see heavier limit sells on the right, heavier sellers. And then we start to see aggressive selling step in after, and you kind of see the book flip and you see it change. All right, we know there's zero prints down there. So if I'm long and I see a thicker book and I start to see heavier size being traded at the bid and there's zero prints down here, I'm scared of my long. Or if I'm short, I have conviction to get in short. But that's how you can watch the order flow at certain levels. It can be very fast sometimes, but you train your eyes, you get good at it. You see these orders being printed and you can kind of make your judgment call. All right. If you wanted to get in short, you get in short right here at 84 for a couple points for these zero prints to fill, and then it moves down and it gets filled 3 points. And that's what some of those floor guys are doing. They're trading with a ton of size and they're scalping. And that's what scalping is. I go for 10, 15, 20, 25 points, 30 points on a trade. But when I get to lows or highs, I'm watching this. So pretend there's a key level here, right? Pretend this is resistance. And or pretend this is a candlestick chart. All right. And we come into the resistance area right here. We hit 84. And then I'm watching the book and I start to see, all right, we need to see buyers press up. All right, they go above my resistance by 1 tick, 84.25. Maybe I'm in short. All right, I start to see heavier size come in on this side. I'm short at resistance. I'm seeing heavier size come in. All right, the buyers push up 1 tick. They can't get the thing any higher. Oh, and then it just drops right there. And then seller comes in. There's selling ensues, and then zero print hits. So I hope that kind of makes sense. But, you know, if you're playing resistance, like if my resistance is at 84, now I'm watching the book to kind of gauge the reaction at my level to see if the buyers or sellers are more strong. Now I'm going to show you a recording I have next to a candlestick chart. And I just want to like highlight how if you see a big number like at a psychological level, like 5,700, it doesn't necessarily mean that you want to get in short because that number is greater. All right. Sometimes it can, but again, you know, here's the Globex high was 56.99. It's coming into this key level, right? It's a psychological level. There's this higher low and this bounce getting put in. So are we going to reject right here and come back down? Or are we going to like break out and go higher? All right. So now we're zoned in on the order flow. You can see this thing push up into 700. It was at 395. We move up into it. There's only 98 orders hitting. As all the actions traded at 69.75. All right. What does that 342 mean? 325. Buyers are aggressively buying this psychological level. If I can get my mouse out of the way, it'd be better. So we're watching the reaction here at 5,700. You don't want to just put your sells right here and think that this is going to drop. You want to gauge the reaction at it. Watching the order flow. Watching this middle column, right? The at bid, at ask. Fast forward it. You can see this number constantly changing. So orders are traders are lifting orders, right? They're not leaving them the whole time. Some guys are probably canceling their short because they think it's going to go higher. It doesn't show intention until it gets filled and you see this hit. All right. But if you're trying to short this high and be a first seller and you're getting in right now, all right, let's see what happens. Size hitting 234, 149. Sellers are trying, and then boom, buyer step right in, 280. This delta is growing. You see the delta right here, right? Tons of buying at this high right here. Tons of buying. This is at 315. So the sellers are trying to move it down, and then the buyers just come in and then take it higher. And then you get to 5,700, and then boom. I mean, it just shoots right up. I'm going to pause it frame by frame. So here we are. Look how quick that was. I mean, in a millisecond. There was 279. This hasn't changed yet. 279 orders at the ask, and then 279 buys come in. 0 prints are formed, and price moves right up, right past 5,700, and continues higher. So I don't want to be a first seller on that level, and I'm gauging the reaction. Now we have these 0 prints. This will probably come back down and test it at some point, but you can see just how fast it'll break up through there. There it is. I'll just stop it again. 279 at the ask, 279 orders come in, and then there's just tons of buying. There's no selling. You have one seller on the bid, and then all this buying. And you can see all the delta. So there's heavy buying going on at this high. Now, are they going to get put in pain if we come back down? Probably. But I don't want to just short blindly because there's a ton of liquidity at that level. All right, that's basically like a lockout. So now I would want to see from here, if we kind of come back down and get underneath 97, 700, then maybe those buyers get put in pain. But that's like a lockout trade at the high right there. And the last thing I want to show you is just kind of how like the footprint, like the book map, like everything's kind of showing you like similar data. So there's my footprint chart and the depth of market on the right, time in sales. So kind of watch as we come into this high. Let me go full screen. All right, so we make this high right here, and you can see the footprint, right? There's 30, 47, there's 30, 47, 30, 47, 30, 47, 30, 47, all right? This left column is the delta, this right column is the volume. You have 30 market buys at 56.50, so there's 30 on the ask, nothing on the bid, 30 delta and 30 volume. And then this 45 plus this 1, what does that get you? 46. All right, so the depth of market, this column, the price ladder, it's showing us the same information that we can see on a footprint, even on Bookmap, and even the time in sales column. Like if I see a big order, this is filtered for higher. You can't really see it on this, but If like 600 contracts came in, I would see 600 right here on the right. So it's showing you the same data. So it just kind of like, I wanted you to see this so it kind of like ties in, the function of order flow is all these tools, they kind of show you the same data, just in a little different way. Like I can see this, the delta and the buying and the selling, kind of like, as a footprint, like historically. And then the ladder shows it to me by price. And I can actually see the way orders are moving on the bid, on the ask. All right, but that's pretty much the depth of market. If you have any questions, please let me know. I hope it's kind of hard to find good depth of market education, so I hope I explained it in a easy way with the video. It's just something that you watch and you get better at, but when you tie it into like the footprint, like you understand kind of like the relationship between everything, and you just watch it at your key levels and gauge the reactions, and over time you're going to learn how to get comfortable taking trade setups. So that's the depth of market. If you learned something new, drop a thumbs up. If you're new to my channel, I'd appreciate you subscribing so I can continue to make trading videos and provide value to those watching. If you're looking to level up your trading, we have our full-time trader course, which gives you access to the Discord where I keep everyone updated on my thoughts and my trading throughout the day so that you can learn from the good and the bad of what I'm doing and what I'm seeing. It's a more personalized approach to learning where you can interact with like-minded traders. That will be the first link down below, and with that, I'm ending it, and I will see you in the next video.